Hello and welcome to this Friday edition of FreightWaves Now. I'm your host Anthony Smith, and coming up we're going to have Andrew Cox giving us a DHL Supply Chain Pricing Power Index update. But first we're going to go to Zach Strickland with a carrier update brought to you by PowerFleet. Stay tuned.
Happy Friday, everybody, and welcome to this carrier update presented by PowerFleet. I'm Zach Strickland, and today I'm going to take us on a different journey, hopefully looking a little bit ahead into the future of freight in terms of what we're going to anticipate seeing here over the next couple of months in terms of freight volumes. Now, we've talked about the outbound tender volume index this week, and it is significantly higher than it was this time last year and even in 2018. So what have we learned? What can we learn to expect here in the next few months? So I've got the maritime imports. A lot of the freight that moves in this country has an origin outside of the country, comes over from China, Mexico, all sorts of trading partners across the world. So looking at the maritime sector, I think is going to be extremely valuable here over the next several months, considering the fact that a lot of the freight that we have seen these disruptions occur from has originated overseas. And we've obviously had some struggles in the supply chains dealing with some of these trading partners. So I've got our customs import data pulled up behind me here. The blue line is our current year customs import shipments, and we see this huge spike at the end of April into May. Again, a little bit of a recovery pattern. Those of you not familiar with the maritime shipping patterns, we have this normal trough that happens in March, late February into March. This one's been a little bit deeper this year because of the COVID outbreak, but again, Chinese New Year delays a lot of imports. It shuts down the production in China, et cetera, and it has a noted impact to the import volumes in the United States. This year, we had a big surge of volume come into the country after the recovery process became really apparent in China. So a lot of this freight came in, hit some of these warehouses, a lot of replenishment orders. Then we started to see all these cancellations and void sailings and things like that. Volumes fell right back below 2018, 2019 levels here, represented in the green and orange. So again, we're still operating below year-over-year patterns in the imports right now. Now, this is going to be for Los Angeles. This is the biggest import area of the United States. Again, a lot of what we've talked about this year is the Ontario and Los Angeles markets in terms of volumes, and that's what's been driving a lot of the volume growth throughout May. A lot of long-haul volumes. This is all replenishment orders because it's shorter to ship from China to Los Angeles, Port of Long Beach, and then just ship it across the country. It takes a little less time, et cetera. So carriers will inevitably have to pick up a lot of freight in Los Angeles, which they have been. It's been one of the tighter markets in the United States this year because of that. So LA import volumes, you can see that big surge in April as China recovered. We see a lot of imports coming in to replenish some of those empty warehouses, and then it starts to gradually fade out, and it's still continuing that. Now, the difference here is that we are starting to see signs or hear reports that a lot of these cancellations are being unvoided, or they're not being canceled anymore. We're starting to see a little bit more recovery. You can see that the imports significantly down year over year in the Los Angeles ports right now. So looking at the relationship between volumes and imports, it's very difficult to see, especially since there's a lot of intra-region movements, things like that. It's not a one-to-one relationship by any means, but you have to think about imports as kind of this potential energy for the freight market itself. As these import volumes are healthy, it means that there's plenty of volume to ship. And you can see this in the OTVI LAX right here. A lot of these volumes were coming into the country, leading those warehouses to be filled with freight ready to be moved, and we're still seeing a lot of that freight pushing out of the Los Angeles market right now, as you see those volumes still surging out of Los Angeles. Now, Savannah, a little bit different. It's more of a clean look in terms of what a true port city relationship is between freight volumes and the import data. So you can see, again, there is a little bit of a delay factor in terms of import volumes, and then you start to see a lot of this freight moving out of that port or out of the port city in the Savannah outbound tender volume index right there in green. So volumes should remain relatively healthy, especially if we're seeing any signs of these start to increase. Now, eventually, they're going to run out of some of this freight moving out of these port warehouse cities, but for now, we appear to be relatively healthy and ready to go. And that'll do it for today's carrier update.
The comprehensive logistics offerings from PowerFleet cover in-cab ELD, fleet management, trailer tracking, cargo monitoring, and tracking other assets such as chassis and intermodal containers. Power up your operations with PowerFleet.
Welcome to your DHL Supply Chain Pricing Power Index update. I'm excited to be here with Andrew Cox. Andrew, what do you have for us today?
Anthony, this week the carriers gained another 5 points. This marks 6 weeks in a row they've come off the bottom. They were at 10 just back in late March, early April, in which they were in a really bad position. But things are looking up. The first reason is these volumes. Zach just talked about them. We've seen them from the import side. We've just seen this incredible rush up in volumes. We're now sitting well above 2018 and 2019 on the volume side. And as Zach mentioned, the West Coast has been a great source of volume for the last, really throughout May. The import volumes were strong. We saw a lot coming out of the LA markets and the Ontario markets, but those have cooled off this week. One market that I did want to point out is the Michigan market. We're seeing that the Rust Belt has rebounded very quickly. The outbound tender volume index for Michigan as a state is actually at its highest level in the past 2 years, so that's a good sign. That was a place you can see that they were really struggling there through the month of April with volumes near holiday levels. So that's a really good sign. And it's mostly dry van volumes that are pushing up this the overall outbound tender volume index. The reefer over the past month is only up about 7%, while the van volumes are up more than 20%.
And this is also an area that's going to be a hot area for automotive, correct?
Correct. Yeah. I mean, personally, I think that's one of the big things pushing this Michigan market opens. 1 out of every 25 people in Michigan work in the automotive industry. So knowing that those factories got back online at the beginning or in the middle of May, I think that's one of the reasons that these are pushing up so high. And we look at capacity here for a moment, or some of the tender rejection index. I have this broken down here. Blue is our overall, green is van, and the orange is reefer. You can tell obviously that reefer has been gradually pushing up, but so has the van volumes, or the van reefer rejections as well. We're just seeing gradual increases. We haven't seen any kind of band up or snap of capacity up, but that doesn't mean we won't in the near future. It's just right now, as volumes have begun to fill these markets, capacity has tightened slightly, and volumes and spot rates have pushed up a little bit over the past 3 weeks.
Right, we're definitely seeing a consistent upward movement, and that's what we want to see, especially with volumes so high, right? And with reefer, we have some catalysts behind it, produce season.
That's right, and that was another one of the sources of volumes on the West Coast and in the Southwest and Southeast. We've seen those volumes have continued to push forward. Again, it's kind of firing on all cylinders right now. That's why we're seeing volumes as high. It's actually only down 11% off that all-time high back in March, which is phenomenal. And this is that credit consumer spending data that we continue to talk about. We just got the newest release, so this is up to the 6th of June. I made a call yesterday on our podcast or 2 days ago rather, with Kevin that we would see a positive day in the month of June, which would be total card spending positive year over year. We almost got it here on the 1st of June, only down 1%. This is a really good sign. Consumers are continuing to spend. How long that can last is still to be foreseen, because consumer credit is way down. People aren't spending on credit cards so much, but they are spending out of the money that the government is giving them. But that is going to run out here in 2 months. So we'll see if this can continue after that.
Right, and one of the things that we want to be mindful of is when the consumers are spending, not to overextend themselves, right, when they're kind of racking up on that credit. So probably a good sign that they're using some of the actual cash that's on hand. And we see that the industries really have been enforced here more so than ever, where we're seeing downward momentum on department stores as expected, but still a lot of growth for the online electronics and e-commerce.
Yeah, it's just more of the same, really. I mean, you're seeing this incredible growth, upwards of 100% on online electronics and near 100% year over year on total online retail. There has been a push to buy more things online. The numbers that I'm really paying attention to the most are this total card spending and the retail spending. The retail spending has actually been positive for a few days in the last week. That's a really good sign. And some other good signs actually too are that people are beginning to move. You can see that the airlines has come up a little bit. Again, we're still down 87% year over year, and lodging is now up a little bit. So you think people are getting out on the road. The gasoline spending is up. People are moving a little bit more, so that's a good sign for the economy as well.
Excellent, Andrew. Thank you so much for that update, and thank you so much for tuning in. That's going to do it for this DHL Supply Chain Pricing Power Index update. Be sure to tune in next week for all the latest. And that's going to wrap it up for this Friday edition of FreightWaves Now, but the content doesn't stop here. We're always streaming around the clock. We have the hardest working media team in the business. So check out our FreightWaves TV app on all your favorite streaming platforms like Apple TV. Thank you so much for tuning in, and we'll see you on the next episode.